everybody, Alex Deploy here from Expert Forex, and in today's video I'm going to talk about why certain Forex traders succeed tremendously and build a fantastic lifestyle out of Forex trading and others fail miserably. Now, I've been in this business for over 14 years, so I know what it takes to succeed and what it takes to fail. Now, on your screen, you'll see a post that was posted just a while ago, in fact, only 3 hours ago, and it seemed to capture all the elements that I'm going to be talking about in this video pretty well. So I'm going to go through that post, and then let's discuss the points that are raised in the post. So the client starts off and says, Alex, about 6 months ago, I purchased the tradable RSI indicator and promptly failed terribly. My first reaction was that it was the indicator's fault and it was just another waste of money. Now, I'm going to talk about failure in EA trading later on. I'm going to focus on manual trading initially, and then we'll move on to EA trading failure. Then, after I cooled off a bit and reread some things, I tried again. This time I watched one of your double in a trade videos. I watched you double your account. Now, in fact, I doubled the same account twice. So I took 5,000 to 10,000 to 20,000, and that was a live account during these webinars. You showed how you filtered through the pairs to find one pair that you wanted to target. Alex, you commented about needing to trade using the RSI, but building confidence with some trades before you decide to jump into the doubling of your account. You commented about some traders being happy with just 20%. Now, I did a bit of marketing there. I don't actually trade 100% of my account, doubling it all the time. But unfortunately, in this market, you need to add sensationalism. So I took a live account and doubled that twice. Normally, I would only risk 20% of my account at any one time. I watched that video numerous times, just trying to pick up on any small clues on what exactly you wanted to see. Long story short, after doing exactly what you described and starting with a $100 trading account, I had lots of weeks where I made 10 to 30% week after week. I repeatedly doubled my account a number of weeks, 7 to be exact. Now, if you double $100 7 times, you're already at $12,000. So this guy took $100 and took it to $12,000. Pretty good for the approach that he... Further, he says, these are not double in one trade trades, but rather several trades taken each week, with the end result being each week the account grew by at least 100%. So he also had a good success rate to build up to those particular levels. All my trading is based on the RSI signals and taking the strongest versus the weakest currency pairs. Now, all this is covered in the lifestyle trading technique. It works great. For the first time in my long unsuccessful trading career, I am making real money. A simple thank you does not seem near enough for the knowledge and confidence I have gained via your instructional videos. Anybody interested in learning more to trade should watch your videos repeatedly. Now, the technique that he used to base his own personal trading technique on is called the lifestyle technique, and it is available on YouTube. It is free. I've basically done webinars and shown the technique because I've been trading it for over 10 years and I have made tremendous success out of it, and I'm giving it away free now because I believe that people who want to succeed in Forex should be aware of this technique. Whether you use it or not, that's your choice. Now, when you go to YouTube, you'll find a channel with 14 videos on it. It's called the Double in One Trade Forex Lifestyle Technique, and you'll find 14 videos that you can watch, and it's basically you can watch them as a course and learn as much as you can from those particular videos. I will be doing some live videos in the future to augment these ones. You'll also see that most of our automated indicators are based around the RSI. If you look at the automated indicator website that we have, we've got the RSI envelope EA, we've got the divergence EA, the trend line EA, the tradable RSI EA, the dream machine, which he mentioned, trading the strongest against the weakest currencies. And we have the 360-degree indicator, which also helps identify the strongest and the weakest currencies. So let's go back to this post. So what's required to become successful as a manual Forex trader? Firstly, you need pretty wide experience, not only of one technique, but of a number of techniques. You should be able to look at a chart and see 10 reasons to buy and 10 reasons to sell. Because that's all Forex trading is all about. It's probabilities and statistics. What are the chances of a buy happening? What are the chances of a sell happening? So you need to know all those techniques. So what this guy did is he took the lifestyle technique, which is a very wide technique. It involves multiple time frames, multiple techniques, and also multiple currencies, and applied and tested that particular technique and designed his own way of trading. So he changed a couple of things. He changed the percentage that was risked and that type of thing, and he personalized the technique. Now, all the successful traders that I know have done exactly that. They have gone to a course, learned a little bit at the course, but taken that knowledge and built on it and experimented and taken off what they don't like and added what they do like, and they've created a personalized technique that they're comfortable with and that works. They can see why it works. They understand everything that's involved in the technique. The problem is when you buy a technique, you try and follow the process like a parrot and you don't actually understand why the technique is working or not. The best way is to almost design your own technique so that you know why the profitable signals are occurring. So manual trading takes a lot of work. You've got to build trading experience, so you've got to trade a lot so that you can notice something that's exceptionally good. You can't just go in and pick and choose and be lucky whether you're going to find a technique that works or not. You've got to trade all of them, and then you'll realize which ones are good and which ones aren't, and you need a knowledge of all of them. Now, for instance, I've got a good knowledge of Fibonacci, but I never use it. But occasionally, if I'm on a 50-50 decision-making situation, I just draw a quick Fibonacci to see if that sways the situation. So you need a wide base, you need to trade a lot, and then you need to personalize your trading technique. And if you do that successfully like this guy has, you can double your account many times. And one of the few areas that why you can double your account all the time is because of the fantastic leverage that gets applied in the Forex market. Can't do that on the stock exchange or indexes and things like that. The Forex market is the only one with this leverage that if you're on the right side, if you are a successful trader, you will make huge amounts of money. All right, so that really covers the manual trading, and there's no shortcut to success trading manually. It's hard work, experience, and building a knowledge base and designing your own technique that you feel comfortable with. So let's move on to EA trading. Okay, now when this post was done, the guy mentioned that he bought the tradable RSI. Now we have on the screen there some results of the tradable RSI, and I'll just go and look at the reduced risk results, and you can see it is highly profitable. It generated 223,000 pips over a 36-month period. Highly profitable. Problem is that the more profitable an EA is, in general, the higher the drawdowns will be. And this one does have fairly high drawdowns, although as a percentage of the income, it is actually very small. So the drawdown's about 14%. So it's not too bad, but there are drawdowns and you have to be aware of that. But on the whole, this is a highly profitable EA. Now I'm going to show you how you trade the EA, how you reduce the risk when you're trading an EA. So here on the screen is the distribution of profitable trades for this particular EA using the optimized approach, and you can see that there's a huge amount of negative trades down here, and you can see the distribution of positive trades up here. Now the trick here is to take this information and put it through a process of eliminating negative trades, and also a process of identifying ranges where the settings would be profitable. So instead of having one setting, you have a range of settings. Now what then happens is you get a chart like this, which has got a much better distribution of profitable trades. You can see there's a huge amount of profitable trades that you can compare to up here. You can see that a lot of the concentration has moved well up into the top half of the chart. Now the trick here again is when you're optimizing a EA, you're taking the very, very top item. You can see there it is, the very top setting, and you're using those settings. Now those are the most unlikely ones to ever repeat ever again. So when you're doing a risk reduction approach, you're using a setting that's in the middle here. So in other words, if it's in the middle here, you can get the settings wrong by quite a lot and still be profitable. You see, here's your margin for error is huge. So you need to know how to do that, how to find the setting that will give you the biggest margin for error. Now, these are all advanced stuff. The average EA tester doesn't apply these kind of things. And this is the message that I'm saying, is that firstly, when you buy an EA, be aware that the profitable ones have got big drawdowns. Secondly, you need to do advanced risk reduction techniques and not just use the most optimized setting, but the one with the highest profitability that also gives you the biggest margin for error. The next thing I want to show you is most probably the most important one, and that is, be aware that no EA can have successful months forever. You're going to have unsuccessful months and you're going to have successful months. And here you can see this fantastically successful EA that's over 220,000 pips has annual results that are all positive, but on a monthly basis it can incur losses, and that is just a fact of life. And a lot of people go out there and they spend their lives trying to avoid these losses. Now if you try and avoid it, you'll find you kill the EA. In other words, because you lose it trying to avoid losses, it won't make profit, so it won't do profitable deals. So it's a catch-22 situation. Now, we have found, and again, this is my experience, I found not to fight the losses, but to just manage them. So this is where the gambling approach plays a big role. You need to be able to let your account blow. If it's a bad month, let it blow. Take the knock on the head and let it blow. Refinance your account and go into this next month and make the best out of the good month. So what you do is if you can take your account and increase it by 400% during the goods periods, and then only lose your one account during the bad, or two accounts during the bad periods, you are a big percentage up every year. So you must also have a mentality where losses aren't important. You have to have a strategy that says, I know overall I'm going to make about 200,000 pips, therefore I'm going to follow the following strategy. Now, when the normal trader buys an EA, he thinks that every single trade will be positive, and every week will be positive, every month will be positive, every year will be positive. So that's the mentality that he's trading with. And that is what kills them, because depending on when you start trading. Now let's have a look at this year here. If you start trading in the beginning of April, you are going to think this is the biggest scam EA in the world. If you start trading at the beginning of March, however, you're going to think that the designer of this EA should be walking on water. Absolutely the most wonderful EA ever. So here's another lesson. Your success with EAs is totally dependent on the day you start trading it. There's no way of managing the future. So if you start trading it and it goes into the wrong market conditions, you're going to make a loss. If you start trading it and it goes into the right market conditions, you're going to make a profit. The supplier of the EA cannot guarantee that you're going to make a profit because of that. That is your trading risk. The Forex market is high returns, high risk. You must understand that. So that's another reason why people fail. They don't have the right mentality. You must be statistically minded. You must be probability minded. You must have a gambling approach. You must be able to take pain and have your accounts margin called. You must have all those kind of abilities. Now, there aren't many people around that have those abilities. Now, you can further reduce that pain by, for instance, this EA that we're looking at here is a sideways market EA. We have a breakout EA called the Make Money EA. Now, that likes trends. So what you do is you put those two EAs together, Make Money and the RSI, the tradable RSI, you put them together and they smooth their results out. So you don't have these violent fluctuations that occur in your results. So, but that's another advanced technique that you need. But the message that I'm saying is be aware that EA trading is not simple. To make really good and consistent money, you need to apply very advanced techniques. If you are buying the EA out of the box and plugging it into your computer, you are rolling the dice. You are taking the biggest chance in the world, and it's not because the supplier is a scam artist. It's because of the Forex market being subject to luck. All right, I think you're starting to get the message about EAs. They are dangerous. You need to have some skills to manage them, and you are subject to luck when you plug that EA in. Now, that is why I like manual trading. Manual trading will tell you when not to trade if you're using a proper system and when not to trade. You will get good signals in good times. You will get no trade or bad signals in bad times to trade. And that's one of the reasons why I still prefer manual trading, because the human mind is thousands times more powerful than an EA, because the EA can only deal with maybe 6 to 10 variables, whereas the human mind can deal with unrestricted number of variables. So if you've been trading for a very long time, when you're looking at a screen, your mind is computing maybe 50 variables at the same time. Whereas the EA can't do that. It doesn't know when Russia's having an election or something like that. But your mind says, oh, look what's happening, and it ties things together that an EA could never do. Anyway, so I hope I've given you some ideas about why certain manual traders succeed, why other ones fail, and why EA traders succeed and why EA traders fail. But it's like a fence. The failures on this side and the successful people on this side. But the ones that succeed in a big way. There's no mediocre success. When you succeed in a big way, and that is because of the leverage of the Forex market. So the key thing is to make the effort to jump the fence and to get to this side is well worth it. Once you're on that side of the fence, boy, some days you feel like you're printing money. But it takes a lot of effort. And I'm just going to very quickly go through those options. The successful manual traders have a very wide knowledge of trading techniques. They have experimented and traded a lot. They've designed their own trading techniques, and they have confidence in their techniques because they know how they work. Unsuccessful ones go and do a course, or they buy a course off the net. They apply the rules of that course or the technique strictly and do not take other elements into account, and they are less likely to succeed. They can succeed, but luck plays a big role, so they could be lucky and they could succeed. EA trading is very dangerous if you don't know anything about EAs. You are subject to the luck of the draw when you plug your EA in, whether you're going to be successful or not. Successful traders have analyzed the strengths and weaknesses of the EA. They know how to improve it and also how to match it with other EAs to make a success of their trading. So that's what I have found in my years of experience, that is what differentiates successful and unsuccessful traders. It's clearly it's a lot of factors. They mental factors, they personality factors, whether you're a gambler or conservative. Mental factors are things like your ability to do maths, statistics, probabilities, to interpret pictures. There's a lot of skills required for that aspect. And thirdly is hard work. The more you trade, the more you gain experience, the more the information you have makes sense to you and that type of thing. So hard work, I think, is another element that I haven't really stressed in this video, but plays a big role in even the EA traders. They spend hours and hours analyzing the EAs, back trading the EAs, understanding what makes them tick, and that is, a lot of people think, oh, EA, you just plug it in. A lot of people are totally disillusioned when they try and do that. So again, if you like this video, please hit the like button. But what I really would like is, this is the gospel according to Alex in terms of Forex trading. So I really would like you to just distribute and share this video with your friends if you have people that are trading Forex. And hopefully I've shown you aspects of Forex trading that you might not know, or that you might not have thought about, or I've given you a different perspective about how you personally can succeed at Forex trading. So from me, Alex Deploy, cheerio.